Hey, this is Justin with DayTradeTheMarkets.com on Thursday, December 19th. Had someone today asking for some examples in the crude oil market, so I thought I would do a video about crude oil and also use it as an example to talk about this concept of what we call confluence trading, and then show some examples. There were some really great examples here in the crude oil today, and you know what? I can even show another example from the E-mini S&P. There's a couple good examples in that today as well. So let me just talk about what confluence trading is first. And it's the idea of waiting for a lot of things to come together at once to give you a good situation. You know, you think about the old movie, The Perfect Storm. It was a confluence of like three weather patterns that created this once in a century type of a storm. Okay, so it's when a lot of things come together, it forms a more complete picture. So with our software and our way of looking at the market, you can look at this as building blocks or pieces of evidence or pieces of the puzzle, and we look at the bigger picture evidence, our bigger picture bias and bigger picture support and resistance level. Then we look at our intraday or real-time type evidence, starting in especially with these level 2, level 3 relative aggression bars. We also have the support resistance zones, the filter, deceleration. And the idea here is that, again, each of these pieces of building blocks is a piece of evidence or a clue. And the more of these pieces of evidence that come together in a confluence type of a manner, the better your edge. Does that mean that every trade you take is going to work out perfectly? No, of course not. That's not realistic. But what you're doing is trading is all about putting the odds more in your favor to give yourself more of an edge. And the more of these pieces that come together, the bigger your edge is. And when you have a situation where 3 and 4 and 5 of these come together at one time, it's a very high edge, low risk type of a trade. Okay, so and to give you a little bit more background here, the real first building block we look at is what we call relative aggression bars, and these are looking at the aggression that underlies the market. Some of it looking at order flow, velocity, volume, that sort of thing. So we're trying to see under the surface. Think about it as, you know, like you see a duck moving on top of the water. That's price action. But if you can see its flippers underneath the water, then you know more quickly what's actually going to happen. Is it going to move left? Is it going to move right? Is it going to take off? It's the same thing here. We're trying to see under the surface of the market to see which side at any given time is more aggressive, buyers or sellers, and then to what degree that aggression is happening. So we really focus on these level 2 or strong buying and selling aggression bars, and especially these level 3 or extreme buying and selling aggression bars. And by looking at those, we get a very good handle of what's truly going on in the real-time auction at any given moment in time on whatever time frame you might be looking at. So hopefully that makes sense. So if we go back to our crude oil example from today, what we've got is heading into the day, our bigger picture bias was up. So all things equal, we would rather be on the long side. We also wanted to watch out for this level here at 98.90, which is our last area of potential resistance. So heading into the day, we know we would rather be on the long side. Okay, all things equal. It doesn't mean you have to be. It just means all things equal. The path of least resistance, bigger picture, is on the long side. Okay. We also know that this is the next structural place would be 98.90 that we would want to watch out to see if the market could get through that level. Okay, so shorter term, or the path of least resistance in the near term, is delineated by this filter down here, and you can see that from the get-go it was strongly bullish. Okay, so that's another piece of evidence. Then you've got this first major piece of evidence is a level 3 or extreme buying aggression bar. That's our first major structure of the day, if you will. Okay, so that has immediate follow-through. That's telling us pretty clearly that buyers are really stepping in here. Then we have this level 2 or strong buying aggression bar. Here's another level 2 bar. Here's a level 3, another level 3 buying aggression bar, and this box is what we call a high velocity move. Okay, so you've got a lot of evidence here showing you that buyers are pretty strong. And we like to look at various trades as the low of these high level 3 bars is what we call a retracement trade. The low of these high velocity moves can be a retracement trade. The high of these level 3 bars that have immediate follow through is also what we call a continuation trade. So you've got a nice little area here, right in this zone here. That's a pretty nice spot to be a buyer. Okay, you've also got this support zone which came in here. You can see it's in green. that's a support zone. Now, usually this would be in red, but when it's yellow, it's telling us caution. There's a lot of strength in the market. Don't necessarily look at this as a resistance zone. Probably the market's going to go through that, okay? So look at what we've got here. Then we also have these decelerations here, these triangles, which are telling us the market, as it's moving down, is actually slowing down. The level of selling aggression is actually decelerating. So what is that telling us? If you put this together, how many pieces of the puzzle are in place here? Well, one is our bigger picture bias, which is up. Two is our filter. Okay, so two pieces of the puzzle together. Three is this structure, these aggression bars, the high velocity moves. We know that's showing really strong buying. Okay, four is this green support zone. Five is these deceleration bars. So we know that at this moment in time, at this place, that's a pretty strong trade entry. Does it mean it's going to work out perfectly? Of course not, but you see how you have a lot of pieces of evidence coming together, and if you have the patience and discipline to wait for situations where you're not just being a gunslinger and trading every 3 minutes, but you wait for situations where a lot of pieces of evidence come together, you're increasing your edge drastically. Okay, so hopefully that makes sense. Then you can see a bit later on in the day, we make new highs for the day, and we test this level of potential resistance. You can see that we stutter there for a bit, but we ultimately do move higher, and then you can see we retest this level at 98.90, and then we have another move higher. Okay, so it's telling us we've gotten through this resistance area. This one would not necessarily be a smart breakout type of a trade, which is something that we often try to do after we can make a new high or low for the day on level 3 extreme buying. You probably wouldn't want to buy the breakout, even though it would have worked today, right into this resistance area. But when we got through that, and then we had another level 3 bar, that's not a bad little breakout idea, because again, you're using this idea of context. You're putting the pieces together. Bigger picture up bias, strong filter, all buying structure. The only selling structure we've had here had no follow through lower. Here's another level 3 bar. We get through this bigger picture area of resistance. Now we make new highs on level 3. A lot of pieces of evidence are telling you this story. Okay, so hopefully that makes sense, and that's the general idea of confluence. You know what? I said I would look at the ES as well. Hold on one second. Okay, the ES has not. It's about 4 o'clock Eastern time right now as I'm doing this. The market hasn't quite closed, but it's been a pretty slow day after yesterday's huge move higher. But again, let's look at what we're looking at. Heading into the day, our bigger picture bias is up. Okay. We also know that this area, we talked about this, we had a little member webinar this morning, this area around 95 to 96 is potentially some support. Okay. So you can see early on, we get some selling that comes in. We tested the high of that with a red filter. It sells off a bit. Then we get another selling structure here right into our support zone. We decelerate right at the support zone. We test one time lower. That gets rejected. We get through this resistance area. This is our first selling structure so far of the day that hasn't had follow through. Okay, so you can see then the filter turns over. This turns over to a support zone rather than a resistance zone. We've got our bigger picture bias again, which is up. Again, we've got our filter, which is green. We've got this support zone, bigger picture, that's held. We now turn to support. We've had a selling structure get rejected. There's a lot of pieces of evidence coming together right in this zone here for a pretty good trade. Now, did it go to the moon? No, it didn't. Same thing here. Green filter, bigger picture up bias, green support zone. We start to get some buying that comes in here. Again, doesn't go to the moon, high edge, low risk type of a trade. So hopefully that makes sense. This stuff applies. We see some of this every day. It's just a matter of being patient enough to wait for the opportunities for things to come together. So hopefully that makes sense. Let us know if you have any questions on that idea of confluence trading, and we'll talk to you soon.